7 ways to pay off your mortgage ASAP. Number 1 is making overpayments. Now, when you originally get your mortgage, you are given your offer notice, and the offer notice or even the illustration will say the maximum you can overpay. Some it's unlimited, the majority it's 10%, some it's 20%. What I would say to you is, based on the interest rate that you are being charged, if you can save in a savings account, say an ISA or a LISA or something like that, for more, then save. And then when your mortgage term, say you're on a 2-year fixed or 5-year fixed, is coming to an end, make a lump sum payment. If the interest that you're being charged every single month is higher than a savings account would be, I'd pay it in full, pay it every single time that you can, but ask if you can. There are different schemes where instead of paying it monthly, you can pay it every 4 weeks. You can also, as I said, make the payment overpayments, but always check that it doesn't give rise to early repayment charges. The next thing is switching to a better rate. So every single time there's the option, make sure you switch to a better rate. There's amazing how many people go on the standard variable rate. Just make sure that it all coincides, and of course that's what mortgage advisors are for if you need help. As I said, lump sum payments are also wise. And the other thing is review it. So when you come to the end of your 2-year or your 5-year fixed, do you have to stick with the 20-year term? Maybe you can now afford to do a 15-year term. The difference is a 20 and a 15-year, you don't get charged as much interest. So a 20, you're getting 20 years worth of interest. A 15, you're only getting 15 years worth of interest. So you're saving that 5 years of interest. The next thing is when the interest rate goes down and you're paying a lower rate, as long as it's within that 10% overpayment bracket, carry on, get into the habit of just making those overpayments. So a lot of people, they were used to paying, say, £1,000 a month for their mortgage, and then when they remortgaged, it actually was less per month. But if you're so used to and you've budgeted for that £1,000, keep on paying it as long as, early repayment charges apply. And then do an annual review. Make sure you do that, because at the end of the day, you'd be surprised at what you can do. Now, the last one is, and this is a bit radical, and I would definitely recommend having a mortgage advisor check it out, but sometimes by moving to another rate or making a lump sum payment, even though you incur early repayment charges, they're minuscule compared to the saving you're going to make. So look